Hello, hi guys. This is CA Balakrishna. How are you? Hope you people are doing well. Even I'm fantastic. So, till the previous class, we have completed 6 chapters revision of CA Inter Audit. Right now, in the today's class, we will start with the revision of 7th chapter, which is audit evidence. Basically, in this 7th chapter, there will be 7 standards you will be having. So, mostly from 500 series, all the standards, SA 500. See, here I have given the list of standards: SA 500, 501, 505, 510, 520, 530, and also SA 230. So all these 7 standards we are going to revise in this particular class. Got it? So without wasting any further time, let us start with the revision of SA 500, which is audit evidence. Now, audit evidence, how you will obtain audit evidence? Of course, by performing audit procedures, you will obtain audit evidence, right? So, this is how the flow will be. So, you will perform audit procedures. From the audit procedures, you will obtain audit evidence. Based on the audit evidence, you will give audit opinion, right? This is the flow. Now, by performing audit procedures, the audit evidence that you obtain will be dealt by SA 500. So, if you see the objective of SA 500, as per SA 500, the auditor, he has to design and perform audit procedures in such a way that those audit procedures will help the auditor to obtain sufficient and appropriate audit evidence. Now, what is meant by sufficient appropriate audit evidence? We will discuss that. Basically, those two are the characteristics of the audit evidence, right? Now, if you see audit evidence, it is the information which is used by the auditor in arriving at his conclusion. Remember that flow I have told you just now. By performing audit procedures, you will perform audit evidence, and based on audit evidence, you will base your conclusions, right, on which auditor's opinion is based. That is nothing but the definition of audit evidence. And this audit evidence, it includes both accounting records as well as other information that auditor obtains during the audit. Got it? And coming to the types of audit evidence, see, these types of audit evidence, based on the nature of audit evidence, it can be either visual, that means by seeing you can obtain some evidence, that is visual evidence. Next, oral, by saying through words, if you obtain any evidence, that become oral. And finally, documentary evidence. See, in the audit, auditor should obtain documentary evidence, because documentary evidence is more reliable than the other visual and oral evidence, right? So this is the categorization of evidence based on nature of the evidence. Now coming to based on source of the evidence. So based on source of the evidence, evidence can be either internal evidence or external evidence. Internal evidence means the evidence that is generated within the organization. Like when you make a sale, you will generate a sale invoice. That sale invoice is internal evidence, right? In the similar way, if you make a purchase, you will get a purchase invoice. That purchase invoice will be given by third party, which is a external evidence. Now you should remember that always external evidence is more reliable than internal evidence. There are some generalizations with respect to reliability of evidence, that also we will see next. So now coming to the characteristics of audit evidence, I have told you now what are the two characteristics of audit evidence. First one is sufficiency, second one is appropriateness. Now sufficiency deals with quantity. Okay, sufficiency is a quantitative aspect, like in number of evidences that you have to obtain, amount of evidence that you have to obtain, that is known as sufficiency, quantitative aspect. Next, appropriateness is a qualitative aspect. This appropriateness, it is again impacted by two things. One is reliability, another one is relevance. Reliability means how much reliance you can place on that audit evidence. to how much extent you can believe in that audit evidence is known as reliability. So some of the generalizations with respect to reliability. See, I told you that there are some 5 generalizations with respect to reliability. External evidence is more reliable than internal evidence. See, external evidence is more reliable than internal evidence. Internal evidence is also more reliable when the relevant internal controls are operating effectively, right? Next, if auditor obtains the evidence directly, then it is more reliable than auditor obtaining the evidence through the management or through any third party, right? Next, documentary form is more reliable than oral and visual. This point we have already seen. And finally, evidence through original documents is more reliable than xerox copies or some photocopies. Understanding, these are 5 generalizations with respect to reliability. And coming to relevance, relevance is nothing but whether for my purpose this audit evidence will be suitable, that is appropriate, is known as relevance. Relevance is nothing but suitability. Okay, so logical connection with the purpose of audit procedure and assertion under consideration. So these are the 2 characteristics with respect to audit evidence. Now I told you, in order to obtain audit evidence you have to perform some audit procedures. What are some of the examples of audit procedures? Let's see. So examples of procedures, first one, inspection. Inspection means you will inspect documents, you will inspect the assets of the company. Understanding, inspection means like verifying, inspecting them. Next, observation. Observation means looking at the procedure or the process, is known as observation. So by observation also auditor can obtain audit evidence. Next, external confirmation. You will use external confirmation with respect to debtors, creditors, asking them to confirm the balance, right? That is through that external confirmation procedure also you can obtain audit evidence. There is a separate standard SA-500 which deals with this external evidence. Next, recalculation. Recalculation means management has already performed a particular calculation, you are again once again re-verifying it. Like management has calculated depreciation, now you are recalculating the depreciation. This is also one of the procedure through which you can obtain audit evidence. Next, re-performance. A particular procedure management has performed, now again you are re-performing it. For example, management has prepared BRS, now again you are re-preparing the BRS to check whether it is correct or not. That is nothing but re-performance procedure. See, all these are procedures. Next, analytical procedure. In case of analytical procedure, you will compare the trends of current year with the previous years. You will also use the plausible relationship between financial data and non-financial data. Basically, in SA 520, we will be clearly discussing about analytical procedure. Through analytical procedure, also you can obtain audit evidence, correct or not. Yes. Next, inquiry. Inquiry means nothing but asking questions to the management or to any third party and getting answers to those questions. So through inquiry procedure also you can get audit evidence. These are some of the examples of procedures that you can perform. Next, coming to the types of audit procedure. See, the above these points are some of the examples of audit procedures. Now these are types of audit procedures. Broadly, there are 2 types of audit procedures. What are they? RAP, FAP, risk assessment procedure, further audit procedures. Risk assessment procedure you will perform as per SA 315, correct or not? So through risk assessment procedure you will assess and identify the risk. What are examples of risk assessment procedures? Inquiry, inspection, observation, analytical procedures. All these are some of the examples for risk assessment procedures, correct or not? Next, based on the risk that you have identified as per risk assessment procedure, you will design your further audit procedures as per SA 330. We have discussed in SA 330. You will design your responses to the identified ROMM as per SA 315, right? Your responses are nothing but the audit procedures, further audit procedures. These further audit procedures are again bifurcated into test of controls. Test of controls, through test of controls you will verify the controls in the organization, and substantive procedure. Substantive procedure means detailed procedures, in-depth procedures are known as substantive procedures. These substantive procedures again they can be bifurcated into test of details and substantive analytical procedures. See, the beauty of analytical procedures is that you can use analytical procedure as both risk assessment procedure as well as a further audit procedure, right? And test of details they can be again bifurcated into test of balances and test of transactions. Test of balances means, see, one of the best examples for test of details is vouching. Vouching is one of the best example for test of details. If you vouch balance sheet items, it is known as a test of balances. If you vouch P&L items, it is known as a test of transactions. Correct or not? Yes. Next, if you have any inconsistency or doubt over the reliability of audit evidence, you have obtained the audit evidence that is not matching with the another audit evidence that you have obtained, or you have doubt over the reliability of audit evidence. In such a situation, what you have to do, you need to determine what modifications or additional audit procedures that you have to perform in order to clear these inconsistency. If at all you are not able to clear the inconsistency, you need to see what impact I need to show on my opinion. Understanding? Yes. Next, this is a last concept, last but one concept of SA-500, which is using the work of a management expert. Now, management they might have hired expert for a particular purpose, let's say for calculation of a provision for gratuity or for valuation of inventory, some complex inventory, they have hired expert. Now, based on experts calculation or experts procedures, management has given that item in the balance sheet. Now, balance sheet or P&L. Now, auditor he needs to verify that item in the balance sheet or the P&L. So, for that purpose, auditor is having two options. If auditor wants, he can use the same management expert, or auditor can hire his own auditor's expert. If auditor chooses to hire his own auditor's expert, then that will be covered in SA 620, using the work of auditor's expert. If auditor decides to use the work of management's expert only, then that is covered by SA 500. Now, when you are using the work of management expert, before deciding to use the work of management expert, what are the some of the aspects that you need to consider? Let us see. First one, you need to consider competence, capability, and objectivity of that expert. Competence means capability, knowledge of that particular expert you need to consider. So, how you can know about the competence and the capability of that expert? See, through professional, personal experience. Now, previously you might have personal experience, you might be having some personal experience with that expert. If yes, then through that personal experience you can know about competence of that particular expert. Like previously you might have used his work, then you would have got experience about his knowledge and experience, right? So this way you can get to know about competence of the expert. Or discussion with the expert. Now you discuss with the expert. See, if you speak with any person for 15 minutes or half an hour, you will get to know about the level of knowledge that he is having, correct or not? So you discuss with the expert, or discuss with others who are familiar with the expert's work. Now, in the past, some people would have used this particular expert's work. Now, make a discussion with that people who have used this expert's work. Through that discussion also, you can get to know about this knowledge of expert, right? Next, knowledge of experts qualification. You have to see what is his qualifications. If he is highly qualified, then his knowledge will be more, right? Next, published papers and books. If he has published any papers or books, you should go through those books and papers also. Next, after knowing about the competence capability of the expert, now you will understand the work that the expert has performed. So, for the purpose of understanding the work that the expert has performed, what you will see, you will understand relevant field of expert. expertise. So you yourself will make some studies about the field of expert, then whether experts field has any specialty areas, and professional or other standards apply. Just like for the purpose of auditing, there are auditing standards applicable. Similarly, like for the purpose of experts work, whether there are any standards applicable. If standards are applicable, then that expert has he followed that standards. If he has followed that standards, then work would have been done properly only. Next, assumptions and methods used by that particular expert. If the expert has used any assumptions or methods, auditor will also understand that particular expert's assumptions and methods. So first you have understood competency capability of that expert. Next, you have understood work that that expert has performed. Now you will see whether that work will be appropriate for my purpose or not. That is, evaluate appropriateness of experts work. Got it? So these are the three things that you will do when you have decided to use the work of management expert. Got it? And there is a final concept, which is audit trial. Now what is meant by audit trial? Audit trial, so basically audit trial is a feature that should be there in the accounting software that the company uses. Now what this audit trial feature will do in the accounting software? This audit trial feature, it will maintain a track, a log of who have passed the entry in the accounting software, when they have passed, at what time they have passed, if there is any alteration made to the entry that is already passed, who made that alteration, why that alteration was made, when that alteration was made, at what date that alteration was made. So all these things will be tracked, a log will be kept by this audit trial feature. Understanding? So by going through the audit trial feature, auditor he can get to know the complete history of a particular transaction from the beginning, who have passed it, when it was passed, and when it was altered, how many times it was altered. All this track history of a particular transaction auditor can get to know by seeing the audit trial. Understanding? So audit trial is a feature of accounting software that maintains, that keeps log of complete details with respect to transactions, like who passed the transaction, when it was passed, and at what time and date it was passed. Understanding? That is a audit trial feature. See, audit trial, it is a documented flow of a transaction. And some of the advantages of audit trial. What are the advantages of audit trial? See, first of all, it will enhance the internal controls in the organization. See, audit trial is also one of the example for internal control. Next, it will fix the responsibility on the persons. Now when someone has passed the entry, the audit trial will keep a record that this person has passed the entry. Now in future, if management or anyone comes to know that that entry is wrong, you can question that person who has passed the entry, right? Because you will, from by seeing the audit trial, you will get to know who has passed the entry, correct or not. So it will help in fixing the responsibility. Next, in case any problem has been identified, you will be able to rebuild the events to get to know how that problem has occurred. Next, specify reason for the problem, you will be able to get a solution for that problem also, and ensuring operation of system as intended. So all these are the advantages, benefits of audit trial feature. This is SA 500. Now moving to SA 501. Basically, SA 501, it is also related to audit evidence only. Just like SA 500 is related to audit evidence, SA 501 also related to audit evidence. But with respect to some selected items, okay, in the area of some selected items, how you have to obtain audit evidence, that we will see in this standard. Basically, three selected items we will be covering. So, in the area of inventory, in the area of litigation and claims, in the area of segment information, how you have to obtain audit evidence in these three situations. See, for each of this item also there will be various assertions. We will not be covering all the assertions of these items in the standard, only some assertions, okay, with respect to some of the assertions of these items, how you have to obtain audit evidence, that we will be seeing. So what are those assertions? With respect to inventory, the assertions we will be dealing is existence and condition. Only with respect to existence and condition of inventory, which audit procedure you have to perform, that we will be dealing here. There are some other assertions with respect to inventory like completeness, valuation. Okay, these assertions we will not be covering here. Understanding? Yes. See, I hope you know what is meant by assertion. In SA-315 we have discussed assertions or the representations made by the management to the auditor, which are embodied in the financial statements. Through financial statements, management will make the assertions to the auditor, right? This we have discussed in SA-315. Next, with respect to litigations and claims, so with respect to litigations and claims, the assertions we will be addressing is completeness assertion. Understanding? Next, with respect to segment information, the assertion that we will be addressing is presentation and disclosure assertion. Got it? So first of all, let us start with inventory. So with respect to inventory, for obtaining evidence related to existence of inventory, what audit procedure will you perform? Of course you will perform physical verification of inventory, correct or not? The same thing is prescribed even by the standard also. See, existence and condition of the inventory, for that you have to attend at physical inventory counting. By attending at physical inventory counting, what you will do, you will evaluate management's instructions and procedures. Management would have given some instructions and procedures to the staff for doing the physical verification. Auditor, he will evaluate whether those instructions and procedures are properly followed by the staff or not. Next, you will also observe performance of count procedure. Now the staff, they are performing the counting procedures, so you will observe whether they are properly counting or not. You yourself also will inspect the inventory, okay, by yourself. Through your hands you will inspect the inventories, whether inventory is actually present or not, and finally perform test counts. These things you will do by attending at the physical inventory counting location, right? And some of the matters that are relevant in planning attendance at physical inventory counting. So what matters you need to consider when you are planning the visit for physical inventory counting? First of all, you will see what is the nature of that particular inventory. So based on nature of inventory, you will take the relevant precautions. Next, stages of completion of work in progress. So for manufacturing of some products, there will be some stages of work in progress, like raw material, it will be put into production, then after put into production, it will go through some 4 or 5 stages of production. Now at each of this stage you will have some work in progress, okay, WP1, WP2, WIP3, like this. You will have stages of work in progress based on number of stages that the entity is having in its production process, right? So you should also consider this. So as many number of stages as they are, the number of work in progress will increase, work in progress items will increase, correct or not? Yes. Next, romum related to the inventory. So you should also consider what is the risk of material misstatement of inventory. See, because based on risk of material misstatement only you will design your audit procedures, correct or not? So for designing audit procedures on inventory, you need to consider what is romum of the inventory. Next, nature of internal control, we have seen this also. Based on how the internal control is working, based on that only you will decide your audit procedures, correct or not? If internal controls are working properly, your audit procedures will be less severe. If they are not working properly, your audit procedures will be detailed, correct or not? Next, timing of physical inventory counting. So at what time you are counting the physical inventory? Either on 31st March exactly you are doing, or after 31st March you are doing, or before 31st March you are doing. There are some special cases with respect to this that we will cover. The next concept is that only special cases with respect to the inventory counting. Okay, next, whether perpetual inventory system is maintained. Perpetual inventory system means as and when the transaction takes place, it gets updated in the inventory records on a real time basis. That is known as perpetual inventory system. So whether the entity is following a perpetual inventory system or periodic inventory system. Periodic inventory system means the transactions will be updated once in 15 days, one or once in 10 days, like that they will update the transactions in the books of accounts. Understanding? So you should see that also, you should consider that also when you are attending at physical inventory counting. Next, locations at which inventory is held. So at which locations the inventory is held, at how many locations the inventory held. Based on this also, your audit procedures, you have to cover all that locations, correct or not. Next, whether assistance of any expert is required for verifying the inventory. So all these aspects you need to consider with respect to inventory verification. Next, some of the special cases with respect to inventory verification. Let us see those special cases. So first situation, inventory counting done at a date other than financial statements. The date of financial statements is 31st March, correct? Now, management, instead of doing inventory verification on 31st March, they have done inventory verification on, let's say, 28th of March. And auditor has attended this physical inventory verification that is conducted on 28th March. In this situation, what the auditor will do? He wants evidence about 31st March, but he has attended as on 28th March. So he will perform audit procedures on whether the purchases, sales during this period have been entered properly or not. If they are entered properly, the inventory, physical inventory as on 31st March will also be proper, correct or not? So this procedure auditor will do if inventory verification is done at a date other than 31st March. The same will be the situation if the inventory verification is done, let's say, on 4th April also. Here also you will perform audit procedures on these transactions. Got it? This is the first situation. So the first situation is inventory verification is done at a date other than the financial statement date, but auditor has attended that physical inventory verification. Got it? Next situation. See, this is 31st March. Now, management, they have done physical inventory verification on 31st March only. Okay, exactly on 31st March only they have done physical inventory verification. But auditor was not able to attend the physical inventory verification that is done on 31st March. Then, in this situation, what the auditor will do? Auditor will conduct physical inventory verification on some other date after 31st March. Let's say some 5th April, auditor has done physical inventory verification. Okay, on 31st March, management has done, but auditor was not able to attend that. So on 5th April, management will do the auditor will do the physical inventory verification, and he will obtain audit evidence as on 5th April. But he wants audit evidence as on 31st March. So what he will do? He will again perform procedures on intervening transactions. Got it? So this is a audit procedure that you will perform if you are not able to attend at the physical inventory verification that the management has done. This is the second situation. Coming to the third situation, attendance at a physical inventory location is completely impracticable. That means not on 31st March, neither after 31st March. It is completely not practicable to attend the physical inventory location. Let's say inventory is located at very borders where there is a threat. Okay, there is a military threat. If you attend that physical inventory verification, okay, in such a situation it is completely impracticable. Or inventory is located in the middle of sea, like some crude oil, these things they will be present under the sea, right? So in such a situation it is completely impracticable to attend physically, correct or not? Then what you will do is you will see whether I can obtain audit evidence with respect to inventory by performing alternate audit procedures. If I am not able to obtain the evidence, even by performing alternate audit procedures also, you will modify your opinion. Understanding? Yes, this is the three special situations. So the same three special situations you'll find here. Next, inventory under the custody of a third party. So if the inventory is under the custody of third party, owner is the entity only, but they are lying with the third party, like you sent on sale or return basis or on consignment basis. In such a situation, what the auditor will do? He will ask for a confirmation from that third party. He will send a confirmation request for the third party, and he will also perform inspection or other audit procedures. Now, if you don't have confidence on the confirmation given by the third party, or you have doubt about the integrity of that third party, see, if there is a doubt about integrity or objectivity of the third party, then what you will do? You yourself can attend that third party location and verify, or on your behalf you can send some other auditor or service auditor, right? These things you can do. So attend, arrange another auditor to attend inventory verification, or obtain another auditors or service auditors report, or inspecting documentation that is available with respect to the inventory lying with the third party. So when you have sent the inventory to the third party on a sale or return basis, you might be having some documentation that you have kept, or for consignment based also there will be consignment documents. So you verify that consignment documents to get evidence that inventory is lying with the third party. Got it? Yes. Next, so these are the procedures that you will perform with respect to inventory, uh, existence and conditions of inventory. Next, litigation and claim. So with respect to litigation and claim, the assertion that we are addressing is the completeness of litigations and claims. So what procedures you will perform to identify litigations and claims? First of all, you will inquire with the management what litigations you have. Give me the list of complete cases against you. You will ask the management, right? You will also go through the legal expense account. If management is saying, auditor, we don't have any litigations or claims against us, then you will go to the P&L statement, profit and loss statement, and there you are finding a legal expenditure, some huge amount. Then you will ask the management, you are saying there are no legal cases, then why did you spend that legal expenditure? Understanding? So you will also review the legal expense account. Next, review minutes of meetings of those charged with governance correspondence with legal counsel. So if at all there are any legal cases pending against the entity, the discussion about how to solve those cases will be made in the meetings of management and those charged with governance. If at all discussions are made, that would be clearly written down in the minutes. So you will also once read the minutes, right? So these are the procedures that you will perform with respect to litigations and claims. Next, in some situations, if you feel that the Roman in area of litigation and claims is very huge, then you can directly consult the external legal counsel, that is a lawyer of the entity also. Now if management refuses, or the external counsel refuses to respond to the auditor, in such a situation auditor will try whether there is possibility for me to obtain audit evidence by performing some other audit evidence. If it is not possible to obtain audit evidence by performing other audit procedures also, then you will modify your opinion, and the letter of inquiry that you send to the external legal counsel, it should not be on the letterhead of the auditor, it should be on the letterhead of the management. Understanding? Because the external legal counsel, he doesn't know who is the auditor, the identity of auditor he doesn't know. The external legal counsel is having relationship with the management. So if you send the letter on the letterhead of the management, then there is high chance that the legal counsel will respond to it. Understanding? Those are the things with respect to litigations and claims. Next, finally, segment information. What is meant by segment information? Let's say, for example, the entity is dealing in many products, then The entity can take each of the product as a separate segment and give separate segment information about how much sales are happening in that product, how much revenue, how much purchases is made, and what are the allocation of administrative expenditures for that uh, segment. Like that you can report, correct or not. Similarly, if entity is operating in various geographical location, each geographical location also you can report as a separate segment, right? So with respect to segmentation, whether that is properly presented or disclosed, we are seeing basically for a purpose of presentation or disclosure of the segment information, the management will be following certain method. Whether the method followed by the management is appropriate or not, you will see. And by following that method, can you get the disclosure as required by the applicable financial reporting framework, or not, you will see. And you will also test the application of such method, and you will perform analytical procedure or other procedure. So these are the things that you will perform with respect to getting evidence about presentation and disclosure, proper presentation disclosure of segment information. Next, some of the examples of matter relevant in obtaining understanding of methods used by the management. You will see whether there is a proper elimination of inter-segment transactions. So inter-segment transactions, they have to be eliminated, right? Next, comparisons with the budgets and other expected results, allocation of assets and costs among segments. So the common costs like salary of employees, rents, these electricity bill, these should be allocated among the segments, right? And consistency with the prior periods. So the same method you need to follow for all the periods with respect to allocation. Got it? Yes. So these are the methods, these are the procedures that you will perform with respect to segment information, right? Yes. Now we will go to SA 505, which is external confirmation. External confirmation means simple. You will send a confirmation request to the third party asking to confirm the balance or any other item. You can ask for confirmation, right? See, what is the meaning of external confirmation? So external confirmation is a audit evidence obtained as a direct written response to whom? To the auditor. From whom? From third party. How? In a paper form or electronic or other medium. Right. Now there are types of external confirmation. First of all, it is a positive confirmation request. Positive confirmation request means you will send a request to the third party, and in that request you will mention, see third party, you please respond me in both the situations, whether you agree or doesn't agree with the information that is present in the request. In both the situation you respond to me. That is known as positive confirmation request. Next, negative confirmation request. In case of negative confirmation request, in the request, while giving the request, you will tell, see third party, you respond me to this request only if you don't agree to the information that is present in this request. If you agree, you don't respond. If you don't agree, then you respond me. That is negative confirmation request. Next, blank confirmation request. Blank confirmation request is also a type of positive confirmation request. See, in blank confirmation request, for sure you will get the response. How? Let's say you are sending external confirmation to confirm the amount of debtor. So in the books of accounts, some 2 lakhs balance is showing. So you are sending confirmation request to the debtor, whether 2 lakhs is the correct or not. Now in this situation, to avoid the probability or the chance that debtor without verifying he will respond, to verify, to avoid that chance, what you will do is, you will not mention the amount in the request. You will keep a blank, and you will ask the debtor, you please fill that blank. How much amount you have to pay to the entity, you write it in that request and send me. Okay, you will not mention this amount in the request. You will just keep a blank. Then it will be known as blank confirmation request. Got it? These are the three types of confirmation request. Next, auditor, he should have complete control over this external confirmation procedures. He cannot assign this task to internal auditor. Like we will be seeing this, As per SA 610, auditor cannot use direct assistance of the internal auditor in the area of this external confirmation. Auditor, he himself has to exercise some control over the external confirmation. Like auditor, he himself has to select the amounts or the information that has to be confirmed. Auditor, he himself has to select the appropriate persons to whom the confirmation request has to be sent. Next, he himself has to design the procedures. Understanding, he himself has to design the request, confirmation request, and sending the request. He himself has to send the request. He should not assign this task, and the follow-up request should also be made by the auditor himself. Understanding? So auditor should have complete control over this entire external confirmation process. Next, while designing a confirmation request, what are some of the points that you will take into account? First of all, you will consider, what are the assertions that are being addressed by me through this external confirmation request. So based on the assertions, you will design your confirmation request. You will also consider the Romum. You will consider layout and presentation. It should be properly presented, right? Designing. Next, prior experience also you will consider. Method of communication, how you are going to communicate, through mail or directly going and giving or through post. Understand? Next, management's authorization, whether management has authorized you for sending the confirmation request, or management has authorized that confirming party to respond to you. That also you will see. And whether that intended confirming party, is he having the ability to confirm that the request, is he having access to the information that I am asking for, that also you will see. Understand? So all these things you will consider in determining or in framing, in designing your external confirmation request. Next thing that you will consider, now you wanted to send a external confirmation, management is refusing, management is not allowing you to send external confirmation request. In such a situation, what you will do? See, inquire reasons. Management, you are not allowing me to send the external confirmation request. What is the reason why you are not allowing me to send the reasons? You will ask the management. You will see whether the reasons are reasonable or not, and you will try, okay, evaluate implication risk of material misstatement, and you will see whether you can obtain audit evidence through alternate audit procedures. If you feel that management is not allowing me and I am also not able to obtain audit evidence through alternate audit procedures, then you will modify your opinion. Got it? So you will see impact or implication on the opinion if it is not possible to get audit evidence through alternate audit procedures. Right. Next, now, so we have seen there are two types of confirmation requests. One is positive, one is negative. Now, which one will provide more reliable audit evidence? Of course, positive confirmation will provide more reliable audit evidence, because whether the person agrees or doesn't agree, will get the response, right? Negative confirmation request, it provides less persuasive audit evidence when compared to the positive confirmation request. So you cannot use negative confirmation every time. Only if following four situations are there, okay, only if following four situations are there, you can use a negative confirmation request. If any one of the situation is not there, also you cannot use a negative confirmation request. What are they? First of all, the ROMM of that particular area should be low and controls around that area should be operating effectively. Next, that area should contain large items of small population, small homogeneous population. Homogeneous means all similar items, like there are 10,000 number of debtors whose value is between 400 to 500. So these are a large number of population with small amounts but homogeneous in nature. Understanding, this condition also should be present to use negative confirmation request. Next, very low exception rate is expected. Exception rate means the chance of occurring misstatement is very low. Understanding, then also you will use, in that situation also should be present to use negative confirmation request. Next, you are not aware of any circumstances where the confirming party will disregard your request. Disregard means he will not at all consider, he will not care about your request. Okay, you don't know that, okay, you don't have any point to believe that the confirming party will not disregard, will not consider my request. You don't know any that point. Okay, if you are sure that confirming party will disregard my request, then you should not use negative confirmation request. Understanding? Only if you don't have any points to believe that the confirming party will not disregard my request, only in such a situation you have to use the negative confirmation request. Got it? So these four situations should be present in order to use negative confirmation request. Next, evaluation of evidence obtained. Now, when you have sent the external confirmation request, you will get the responses, right? That responses, for the purpose of evaluation, you can categorize them into four. What are they? First one, the responses you have received which you can completely believe, okay, they are matching with the amounts in the books of accounts and no further procedure is required for them. That is first categorization. Response indicating agreement without a exception. Next, response deemed unreliable. You are having some doubt about the response. It is matching, but there is a doubt. That is the second category. Next, non-response. You haven't received a response at all. That is the third category. Finally, response indicating exception. Okay, the response you got is not matching with the actual amount in the books of accounts. These are the these are the four categorizations that you will make while evaluating the responses that you have got with respect to the external confirmation request. Got it? So this is SA-505, right? So three standards are done. Still we have four more standards to go. So yes, now we'll start with SA-501. What is this SA-501 is about? It is about initial audit engagement, opening balances. So what is, first of all, what is meant by a initial audit engagement? See, let us see the initial audit engagement. An engagement in which where prior period financial statements are not at all audited or audited by some predecessor auditor. In these two situations, you will call it as initial audit engagement. Got it? So previous year financial statements not at all audited, or previous year financial statements audited by some other auditor other than you, then it will become initial audit engagement for you for the current year, right? See, note, predecessor auditor means the auditor from a different firm who has audited the previous year financial statements. Yes, sorry. Next, objective of auditor with respect to opening balances. So with respect to this SA-510, what is the objective of auditor? First of all, opening balances contain misstatements that affect the current period. You need to check that there are no misstatements in the opening balances that will affect the current period financial statements, and also accounting policies that are followed in the opening balances are consistently followed in the current period also. If at all there is any change in the accounting policy, that has been properly accounted for. So these two are the objectives of auditor as per SA-510, right? So basically, see, when you are auditing for the current period, the closing balances of previous year automatically becomes the opening balances of a current period. So these opening balances, they have impact on the current period transactions or not. So you need to verify the opening balances. Next, some of the audit procedures that you will perform with respect to opening balances. What are they? First of all, you will see whether from the previous year closing balances, whether they have been correctly brought forward as the opening balances or not. Next, you will determine whether opening balances reflect appropriate accounting policies. Okay, accounting policies that are followed in the opening balances, whether they are appropriate or not, and whether they are consistently followed in the current period also or not, that you will see, right? Next, if a prior period financial statements are already audited by some other auditor, you will once peruse, go through that prior period financial statements. Understanding? Yes. Next, evaluate whether current period audit procedures provide evidence with respect to opening balances, generally with respect to the current assets. With respect to the current assets, that the audit procedures that you perform in the current period will provide audit evidence about the opening balance. Let's say, for example, trade receivable opening balance sum 50,000 is their opening balance. You have received that 50,000 during the year. Now, audit procedures that you perform on the transactions taken place during the year will provide you a evidence about that opening balance of 50,000. If that trade receivable opening is there, means only you will receive it. Otherwise, how, why will that trade receivable will give you, correct or not? So with respect to current assets, generally the audit procedures that you perform on the current period transactions will provide you some type of audit evidence about the opening balances. Got it? Next, reading most recent financial statements and the predecessor audit report. This also you will perform with respect to the opening balances. These procedures you will perform. Next, with respect to accounting policies, see, you will check that the accounting policies that are followed in the opening balances or the closing balances of previous year have been consistently followed even in the current year also. See, obtain sufficient appropriate audit evidence whether accounting policies reflected in opening balances are consistently applied in the current year also. If at all there is any change in the accounting policy, okay, you can change, but properly account for such a change. Understanding? If not, auditor he will give either qualified or adverse opinion based on pervasiveness of the matter, because here evidence is available and it is also material, and based on pervasive or not he will give qualified or adverse. Got it? Yes. Next, audit reporting in some special situations. First of all, auditor is unable to obtain sufficient appropriate audit evidence regarding opening balance. Audit evidence itself not there. That means you will give either qualified or disclaimer, because adverse you will give only if audit evidence is there. So qualified or disclaimer. Next, concludes that opening balance contain misstatements. Audit evidence is present, so you will give qualified or adverse based on pervasiveness of matter, qualified or adverse. Simple, right? Next, predecessor auditor's opinion includes modification and it remains material for the current period financial statements also. Then you will modify the current period financial statements. See, if there is modification in the predecessor auditor's report because of some misstatement, and that is carried forward in the current period also, it is not corrected in the form of opening balances, it is carried forward, then you also will modify your opinion on the current period financial statements, right? Yes. So this is simple, SA 510. Next, moving to analytical procedures, SA 520. So first of all, what is meant by analytical procedures? See, generally you can perform analytical procedures either as a risk assessment procedure or as a further audit procedure. So this we have already discussed yesterday 315, right? Let's say the best example for analytical procedure in the P&L statement, salary expenditure is being shown as a 12 lakh rupees. Now, in order to verify this salary expenditure, you are performing analytical procedure. Like you will ask the management how many number of employees are there. Management will say 10. On an average, how much salary you are paying to them monthly basis? They will say 10,000. And of course, there will be 12 months in a year. So 10 multiplied by 10,000 multiplied by 12 months, you will get 12 lakhs. So without actually verifying detailedly each and every salary payment, you are getting evidence about this salary of 12 lakh rupees by performing this analytical procedure, correct or not? Analytical procedure is nothing but using the plausible relationship between financial and non-financial data and thereby expecting a amount is the analytical procedure, with one type of analytical procedure. Another analytical procedure that you can perform is, let's say, in the past 5 years, the growth of sales is with a rate of some 5%, but in the current year, the rate of growth is some 50%. So here you are comparing the current year growth with past trend, nothing but a trend analysis. This is also nothing but an analytical procedure, understanding. So analytical procedure can be in the form of trend analysis, in the form of ratio analysis, or using the plausible relationship between financial and non-financial data. If you see here, number of employees is a non-financial data and average salary is a financial data, and there is a relationship between this. So by using that relationship, you are expecting the value of salary amount, correct or not? This is the analytical procedure. Let's see. So analytical procedure, meaning of analytical procedure, It is evaluation of financial information through analysis of plausible relationship among both financial and non-financial data. Just now we have discussed. Next, investigation to identify fluctuations or relationship in the form of trend analysis or ratio analysis. So first one is the relationship, second one is the ratio analysis, trend analysis. Next, type of analytical procedure that you can perform. See, you can compare client data with industry data, right? Comparison of client data with industry data. Next, comparison of client data with similar prior period data of the same client. Next, comparison of client data with client determined expected results, nothing but budgets or forecasts, you can say. Next, comparison of client data with auditor determined expected results. This is nothing but by using the relationship between financial and non-financial, you are expecting a amount and comparing it with the client data is also analytical procedure. Next, expected results using non-financial data. So in all these fashion, in all these manner, you can perform analytical procedures. Got it? Yes. Next, objective of analytical procedure, simple: obtain relevant and reliable audit evidence when using substantive analytical procedures, and design and perform analytical procedure near the end of the audit. This is the objective with respect to analytical procedure. Next, purpose of analytical procedure. Why you are performing these analytical procedure? For the purpose, see, use comparisons and relationships to assess the reasonableness of the information that is shown in the financial statements. In the financial statements, they are showing salaries of 12 lakhs, whether the salaries of 12 lakhs is reasonable or not. For that purpose, you are performing some analytical procedure. Next, interfirm and intra-firm comparison. Okay, you can compare the data of the firm within and also the data of the firm with outside with the help of analytical procedure. Next, independently verify the correctness of some items of expenses. Just like you have verified the correctness of salaries, you can verify the correctness of rent, the electricity, all the expenditure you can verify by using analytical procedures. So that was purpose of analytical procedure, right? Next, some of the factors that you will consider for substantive analytical procedure. See, substantive analytical procedure means use of analytical procedure as further audit procedures, right? Substantive means detailed, right? Now, so you will consider availability of data, whether the data that is required for performing analytical procedure, is it available or not. See, in case of that salary example, you require data about average salary, data about number of employees. If you don't have that data, how can you perform analytical procedure? So you will consider the availability of data. Next, disaggregation. Disaggregation means how much dispersed the data is. Aggregation means all the data is available at one point at one particular place is aggregation. Disaggregation means data is spread across. This also you will consider. If data is spread across, it will take time for you in first of all gathering that data. That point also you will consider while using analytical procedure. If much of time is being wasted in gathering the data itself, then better you will perform a normal substantive detailed checking instead of going for analytical procedure. Correct or not? Next, account type. You will also see what is the type of account. Generally analytical procedures, they can be performed in case of P&L items, and in case of balance sheet items, it is very difficult to, in fact you cannot perform analytical procedures for balance sheet items. Understanding? Next, what is the source of data? Because source of data will impact the reliability of data. If the management is giving you number of employees, then that is fine. If some other third party is giving the number of employees, then you cannot rely on that data. Correct or not? So source of data. Next, predictability. There should also be predictability. If data is not predictable, you cannot perform analytical procedures. Next, nature of assertion that you are trying to address. See, if you are trying to address in case of salaries, the assertion that you are trying to address is, for example, let's say accuracy, then you can use analytical procedure. If you are trying to address assertion of completeness, then analytical procedure you cannot use. So whether to use analytical procedure or not, it also depends on which assertion you are trying to address. Next, inherent risk or what can go wrong. So you should also consider the inherent risk that is present in that area. So all these factors you need to consider while deciding to use analytical procedures. Next, techniques available for analytical procedure. So I have already told you this trend analysis, that is comparing current year data with previous year data. Next, ratio analysis. Next, reasonableness test. Reasonableness test is nothing but a use of the financial and non-financial data for expecting the value of a amount is nothing but a reasonableness test. Structural modeling is upgraded version of reasonableness test. Here in this structural modeling, you yourself will develop a particular formula for performing analytical procedure that becomes a structural modeling. Next, steps involved in analytical procedures. So, what are the steps? First of all, you will determine suitability of a particular substantive analytical procedure. So, I am deciding to use a particular analytical procedure, whether this is suitable for this purpose or not. You will see. Next, evaluate the reliability of data from which expectation is developed. So, you have chosen a particular procedure, you have chosen you have decided whether to use this analytical procedure for this purpose or not. Next, you require data for performing analytical procedure, whether that data is reliable or not, that also you will see. If that data itself is not reliable, the expectation that you develop from the data will also be not reliable, correct or not. So the next step you will see is the reliability of that particular data. Next, develop an expectation. So you will multiply the number of employees with average salary, and you will develop a expectation of amount that should be present in the financial statement. So that is the third step. And finally, determine the amount of any difference amounts recorded amounts from the expected values. So after expecting the amount, you will compare this amount with the actual amount, and you will see whether there is any difference, and you will evaluate the difference, right? So next one is that only investigating results of analytical procedures. How you will investigate results of analytical procedures? If analytical procedures identify any fluctuation means by in our example, by multiplying the average salary and number of employees, you have expected a particular amount, let's say 11 lakh rupees you got, but in the P&L it is showing 12 lakhs rupees. So there is a fluctuation. In such a situation, inquire management why there is such fluctuation, and perform other audit procedures to come to a conclusion about that fluctuation. Got it? So this is how you will investigate the fluctuations that you identified through analytical procedures. This is SA-520 analytical procedures. Next we'll start with SA-530. So SA-530 deals with audit sampling. What is meant by audit sampling? Application of audit procedures to less than 100% of the population is known as audit sampling, correct or not? Next, what is meant by population? Population means the entire set of data from which you will take the sample is known as population. Next, sampling risk. What is meant by sampling risk? Risk that auditor's conclusion based on the sample may be different if auditor has performed the same audit procedures on a complete population. Such a risk is known as sampling risk. Next, anomaly. What is meant by anomaly? In the sample, you have identified a particular misstatement, but you are sure that such a misstatement will not be there again in the entire population. That means such a misstatement is not representative of the entire population. It is present only in the sample. In such a situation, you will call it as anomaly. So while projecting the misstatements from the sample to population, you will not project that anomaly. You will delete that anomaly, and then you will project the misstatements to population, right? Next, tolerable misstatement. What is meant by tolerable misstatement? The rate of misstatement, or the amount of misstatement which the auditor has kept, stating that up to this point of misstatement I am fine, but if the misstatement crosses this level, then I cannot accept that misstatement, is known as tolerable misstatement, right? See, a monetary amount set by the auditor in respect of which auditor seeks to obtain appropriate level of assurance that the monetary amount set by the auditor is not exceeded by the actual misstatement is known as tolerable misstatement, right? Yes, sir. Next, characteristics of population. See, what are the characteristics of population? First of all, the population should be appropriate for the procedure that you are going to perform, and it should be completeness. See, the sample that you take should be from the complete population. You should not take the sample from only half of the population. Then what will happen? You are ignoring another half, right? Such a thing should not happen. So population should be complete. And finally, it should be reliable. The population based on which you are taking the sample, that population should be reliable. If population itself is not reliable, the sample and the evidence, the misstatements or the procedures that you perform on the sample will also not be reliable, right? Yes, these are the characteristics of sample. Next, approaches to sampling. Basically, there are two approaches to sampling. One is statistical sampling and another one is non-statistical sampling. So, what is meant by statistical sampling? See, the features of statistical sampling. First of all, the statistical sampling, it has a random selection. Okay, it has the feature of a random selection of the random selection of the items from the population. That is the first feature of statistical sampling. Next, statistical sampling uses the probability theory. Okay, use of probability theory, and statistical sampling is more scientific when compared to non-statistical sampling, and this statistical sampling is having a wide application, reasonably wide application. It is applicable in a lot of situations, and there is no personal bias that will be involved in case of statistical sampling. No personal bias will be there. And advantages of sampling, statistical sampling. See, in case of this statistical sampling, the amount of sample will not increase in proportion with the increase of population. Understanding, that is one of the advantage. So the how much population increases, also the sample will not increase that much. Understanding. Next, sample selection is more objective. That means you will select the sample based on facts. Okay, it will be more objective instead of depending completely on biased or will and wish of any party. So there will not be any biasedness. It will be completely based on objectiveness. Next, it is the means for deriving a calculated risk. Okay, you can take a calculated risk with the help of using a sampling. Next, better description of large mass of data. So the sampling that you have performed with the help of the statistical sampling will provide you a good description, a good idea of entire population than using non-statistical sampling. Okay. Next, estimating minimum sample size associated with specified risk and precision. So you can estimate a minimum amount of sample with exact precision and exact risk level, right? These are the advantages of statistical sampling. Next, coming to non-statistical sampling. Basically, in case of non-statistical sampling, what happens? Personal bias is involved, right? You will take non-statistical sampling based on judgment of the auditor, previous experience of the auditor. In such a situation, the possibility of biasedness will be more, right? So generally, non-statistical sampling is not preferred that much when compared to statistical sampling. Next, sampling methods. So what are the various sampling methods that are available? Firstly, in random sampling, you have simple random sampling. So in case of simple random sampling, you will select the samples based on random number table generators. So if you go into the Google and search for random number table generator, you will find a particular uh, site wherein if you click on refresh, it will generate a random number. So based on that random number table generators, you will select the samples. Next, stratified random sampling. In case of stratified random sampling, what you will do is the entire population, you will divide them into stratum. Okay, so from all the population, the items which are of same characteristics, you will make them into stratas. So from this stratas, you will again apply random sampling. Okay, from these stratas, randomly you will select some of the items into sampling. Understanding, instead of directly selecting from the entire population, first of all you are stratifying the population, and then from stratas you are selecting the samples. Got it? Yes. Next, interval sampling or systematic sampling. In case of interval sampling, you will first of all calculate interval. How you will calculate interval? Let's say total population is 1000 and you wanted to select a sample of 50. That is, sample size is 50. So by 50. So your sampling interval becomes I guess 20, right? So every 20th item you will select as a sample. Understanding? This is how you will perform interval sampling. Next, monetary unit sampling. In case of monetary unit sampling, you will give weightage to the amount. So if the amount of a unit is more, then the chance of that being selected into the sample is high. Okay. In case of monetary unit sampling, what happens is, if let's say a particular item, its amount is 1 lakh rupees, and another item, its amount is some 2000 rupees, then in case of monetary unit sampling, the chance of 1 lakh rupees coming into the sample is more when compared to this 2000 rupees. Okay, here you will give importance to monetary value. Okay, next, haphazard sampling, you will not follow any strict method for haphazard sampling. Just like that, you will select the sample. Okay, next, block sampling. In case of block sampling, you will select a block of contiguous items into sampling. Let's say, for example, sales that has taken place from 1st to 10th of every month. So there is a contiguous items you are selecting each and every month, 1st to 10th date sales you are selecting into sample. This is block sampling. A block of items you are directly selecting into sample. Got it? Yes. Next, steps in performing the sample. So what are the steps in performing the sample? First of all, you will decide sample design, size, and selection. Sample selection. So while designing the sample, you need to consider the procedure and characteristics of the population. So for which procedure you are selecting the sample, and what are the characteristics of the population from which you are selecting the sample, this you need to consider. Next, with respect to sample size, you have to select sample size in such a way that it is sufficient to reduce the sample risk to acceptably low level. Understanding sample risk means we have already discussed, right? The risk that the conclusions that you reach based on sample will differ from the conclusions if you apply the same procedures on complete population. Such a risk is known as sampling risk. Now, while uh, while deciding on the sample size, you have to choose such a sample size in such a way that the sample risk will be reduced to acceptably low level. And finally, sample selection. While selecting the sample, you need to take care that all the items in the population will have equal chance of being selected into the sample, right? This is the first step in case of sampling. Next step is performing audit procedures. Now on the sample, you will perform audit procedures, and if at all the audit procedure is not applicable, or is not applicable to any of the item that you have selected into the sample, then what you will do, you will remove that item, and in place of that item some other item you will select, and on that new item you will perform audit procedure. This is nothing but a replacement item, right? Next, if you are unable to perform procedure, the designed procedure on the sample, on one of the sample item, then you will call it as a misstatement. Got it? So these 2 points are important. You have selected the sample. In the sample, there is a one particular item for which the audit procedures that you are going to apply are not at all applicable. Then you will remove that item from the sample, and you will take a new item into the sample, and on that new item you will perform audit procedures. This is the replacement item. Next, sample you have selected. Now in this sample, there is one particular item on which you are not able to perform the audit procedures. These audit procedures are applicable to that item, but you are not able to perform audit procedures because of some circumstances. Then you will call that item as a misstatement. Got it? Yes. Next, evaluating nature and cause of deviation and misstatement. So after performing audit procedures, you will identify the misstatement. So you need to identify misstatements that are having common features. So if you have identified a misstatement in the sample. Now there is a chance that there can be other misstatements of same nature in the entire population. So you have to check all that items which are having of same nature in the entire population to check whether they are of whether they are also misstatements. Understanding? Next, if auditor treats misstatement as anomaly means, I have told you that misstatement is present only in the sample. It is not representative of entire population. It will not be for sure present in the entire population. Then you will call that as anomaly. Now, while projecting the misstatement to population, will you project this anomaly also? No. See, projecting misstatement means there is a 1,000 population. From this 1,000 population, you have selected 100 sample. So in the 100 sample, by performing audit procedures, you found some, let's say, 5 misstatements. Now you will project these misstatements to entire population. In 100 sample, 5 misstatements means in 1,000 sample, how many misstatements can be there? 50. Correct or not? Now what they are saying is, of these 5, okay, of these 5 misstatements, one misstatement is anomaly. In such a situation, you have to reduce that one and make it 4 and only project this 4 to entire population. So then it becomes 40 misstatements in the entire population. Got it? This is known as projection and removal of anomaly from the projection. Next, see, projecting the misstatements. For test of details, you need to project the misstatements. For test of controls, for controls, you need not project the misstatements. Why? See, in case of test of details, amounts, there will be number of misstatements. So you will project them. But in case of controls, you will term it as rate of deviation. Okay, controls are deviated for by this much percentage. You will speak in percentage terms. So if you project that percentage to entire population, that percentage it will remain same only. The percentage will not change. Correct or not? So you will project the misstatements in the amounts to the population, but you will not project the rate of deviation in the controls to population. Got it? Next, exclude anomaly while projecting the misstatement. Simple. Next, evaluate results of audit sampling. So after doing entire sampling, now finally you will evaluate the results of the sampling. How you will evaluate? Whether use of sampling has provided you reasonable basis for conclusion about the entire population. So have you got reasonable results by application of this sample or not? That is what you are seeing in case of evaluating the audit results of audit sampling, right? So this is how you will perform audit sampling. Next, going to SA 230, which is audit documentation. So audit documentation, it is record of audit procedures performed, right? Audit documentation is record of 3 things: audit procedures performed, audit evidence obtained, and the conclusions that you have reached. If you combine these 3 things and maintain a record, that becomes audit documentation. Understanding? Next, objective of this essay 230. This objective is simple: prepare audit documentation that provides a record of basis for audit report and the opinion that you have given in the audit report. Okay, the opinion that you give in the audit report, it should be substantiated. There should be basis for that opinion. Correct or not? So maintaining record of such basis is the objective of this essay 230. And also to prove that audit was properly planned and properly executed. To prove that also you need to maintain documentation. These two are the objectives of essay 230. Next, form, content, and extent of documentation. See, you need to prepare audit documentation. See, form, content, the extent means, form means in which format you need to maintain. Content means what should be there in that audit documentation. Extent means how much documentation is required. See, you need to maintain such a form, content, and extent of documentation that will enable an experienced auditor who is not having any prior idea of the audit that you have conducted. He should be able to understand the following things: nature, timing, extent of audit procedures that you have performed, results of audit procedures that you have performed, and significant matters arising during the audit. So An experienced auditor who doesn't have any idea of the audit that you have conducted should be able to understand these three things by reading your documentation. Such an amount of documentation you have to maintain. Understanding? Yes. Next, why audit documentation is required? See, there are various reasons why audit documentation is required. First of all, it will assist the engagement team to plan and perform the audit properly, and it will also direct and supervise audit work and discharge the review responsibilities. See, there is concept of engagement quality control review. There is concept of peer review. There is concept of quality review. Now, for all these reviews to properly take place, there should be documentation. They will review the documentation. If documentation itself is not there, what will they review? So this is also one of the advantage of documentation. Next, fix the accountability for the work. So the person who is who has done the work, he has to maintain the documentation, and in the documentation he will sign. So in future, if at all there is any mistake with respect to that work, you can fix the responsibility on that person, on that particular person who has done the work, correct or not. Next, retaining record of matters of continuous significance. If any matters that are required not only for current period audit but also for future audits, you can retain a record of such kind of information. Next, enabling the conduct of quality control reviews. Just now I have told you, maintaining audit documentation will help you for performing proper quality control reviews, peer reviews. Next, enabling the conduct of external inspections. This is also one of the requirement for one of the advantage for maintaining audit documentation. Got it? Yes. Next, audit documentation need not include following things. So, what aspects need not be included in the audit documentation? Let us see. Superseded drafts of working papers and financial statements. Superseded drafts means there is a final version of a particular document, and there are draft versions of that particular document. The draft versions you need not document, just the final version is sufficient. Next, notes that reflect incomplete or preliminary thinking. Okay, some of the preliminary notes that you have maintained, that also need not be documented. Next, previous copies of documents corrected for typographical errors. Okay, you have prepared a document, you have prepared a particular paper, and there are some errors in that. So you have corrected them and replaced it with the new paper. Then the old one in which there are typographical errors, you need not document. Next, duplicates of documents. See, documents, only one copy is sufficient. The duplicate copies you need not document, right? These things they need not be included in the audit documentation. Next, factors that will influence form, content and extent of audit documentation. So what factors will influence the form? Content. Form means in which format, content means what should be there, and extent means how much. So what factors will influence these things? First of all, size and complexity of the entity. So how much is the size of the entity and how much complex the transactions the entity takes place. If the size of entity is more documentation required. Complexity is more documentation is required. Next, nature of audit procedures you are performed. So what type of audit procedures you are performed, that also impacts the nature, the form, content, extent of audit documentation. Next, identified romum also impacts high romum, high documentation. Significance of audit evidence obtained. Significance means importance of audit evidence obtained. Nature and extent of exceptions. Exceptions means deviations, misstatements. So if you feel that more misstatements can occur, then more documentation is required, correct or not? Next, need to document a conclusion. You should also see whether there is a particular need to document a conclusion. Let's say a law or regulation has asked you to document a particular matter, then you have to clearly document that aspect, correct or not? Next, audit methodology and tools you have used. So all these aspects or factors will influence the form, content, extent of audit documentation. Got it? Yes. Next, specific documentation as per SA-230. So SA-230 requires you to maintain certain specific documentations. What are they? First one, nature, timing, extent of audit procedures. So you need to maintain the documentation that will record nature, timing, extent of audit procedures that you have performed, and you should also record characteristics of specific items that you have tested. Okay, you should record the characteristics of the items on which you have performed the audit procedures, and you should also record who have performed that work and which date they have performed, and who have reviewed that work, and on which date they have reviewed. All these things you need to document. Specifically, you need to document. Next, discussions of significant matters with management, those start with governance and others. These also you need to document. And finally, if information is inconsistent, so if you have found any inconsistent information, like you have obtained two evidences with respect to same item and there is inconsistency between these two evidences, then how you have dealt with that inconsistency, how you have resolved that inconsistency, that also you need to document, how the auditor has addressed the inconsistency, right? So all these aspects you need to document. Next, matters arising after the date of auditor's report. So now after the auditor has given his audit report, if at all he has performed any audit procedures, then he should document why he has performed that audit procedures after the date of audit reports, what circumstances has caused the auditor to perform audit procedures after the date of audit report. See, what circumstances you have encountered because of which you have performed the audit procedures after the date of audit report. Next, what are the new or additional audit procedures that you have performed, that also you need to document. Next, when and by whom the resulting changes to audit documentation were made and reviewed, right? These things you need to document if at all you have performed any audit procedures after the date of issuing auditors report. Next, coming to audit file. What is meant by audit file? See, all the documentation with respect to audit engagement of a particular entity, if you combine them and keep them in a particular file, you will call it as audit file. Simple, right? That is the meaning of audit file. See, one or more folders containing records that comprise the audit documentation for a specific engagement of a entity is called as audit file. Next, timeline for documentation. So you need to finalize this audit file within 60 days from the date of audit report. Okay, from the date of audit report, within 60 days you need to finalize the audit file. Next, what is the retention period of this audit file? You need to retain this audit file with you. You should not dispose it, you should not burn it, okay, for a period up to 7 years from the date of audit report. Understanding? So the audit documentation, the audit file that you maintain should be retained by you for a period of 7 years from the date of audit report. Next, that is a retention period, which is 7 years. Next, administrative changes. See, at the time of final assembly process, you can make administrative changes, provided you should not add any new audit documentation. Understanding? What could be some of the examples of administrative changes? Like deleting or discarding superseded documentation. Okay, you are deleting or removing the draft versions. Fine, you can do that. That is the administrative change. Next, sorting, collating, and cross-referencing working papers. Like you are cross-referencing working papers or taking the working papers and pinning them. That you can do in the as an administrative process. Next, signing of completion checklist. Completion checklist means there will be a checklist of whether you have properly documented all the required documents or not. Okay, you need to, after completing the audit file, after properly documenting the audit file, you need to take this checklist and verify whether as per this checklist every document is there in the audit file or not. That is known as the final checklist. So this checklist you will prepare or you will perform after the audit file is prepared. This is also a administrative process. Okay, next, documenting any audit evidence which was previously discussed before the date of audit report. Only you have discussed the audit evidence with the engagement team and it was approved, but at that time you have forgotten to keep in the audit file. Now you are keeping it in the audit file. This evidence, this audit evidence is not obtained after the date of audit report. Before the date of audit report only you have obtained, but you have forgot to keep it in the audit file. Now you are keeping it. This is also an administrative change. Got it? Next, ownership. Who is the owner of the audit documentation? Of course, auditor is the owner of the audit documentation. Next, completion memorandum. What is meant by completion memorandum? Completion memorandum is nothing but a summary of following things. The summary that describes significant matters identified during the audit and how they were addressed. So you should also prepare this completion memorandum after the entire audit is completed. This contains a summary of significant matters that you have identified and how you have dealt with those significant matters. Got it? Yes. This is SA 230. So by this, we have completed the revision of entire 7th chapter audit evidence, right? So in the next class, we will be meeting with a revision of new chapter, which is 8th chapter. Okay, so we'll be meeting you in the next video. Until then, take care. Bye bye. See you.